Hello, my YouTube friends. I hope you're all doing well. What a great morning. I can't tell you how excited I am to see Target come out with their earnings and the stock drop. Creates a great opportunity. I'm going to talk about that today. I'm going to also talk about some of the dividend stocks that I've been looking at and why I think that I see them continuing higher, what's going on with the macro economy. Probably delve in a little bit to show you how wacky my brain is and some of the other stuff I talk about, but I'll explain why it isn't anything to really get overly concerned about. So stick around for the video. It should be a good one. Good morning. My name is Adam Kahn, and this is Investing with Adam K. Also the Rational Investor. Sorry, I can't help it. Anyway, I hope you're all doing well. I hope your Wednesday is going good. Beautiful, beautiful day here in Las Vegas. I hope you guys are enjoying the weather. Birds are out, you know, probably head down to the office for a little bit, watch some CNBC, which I do early in the morning as well when everybody's asleep, which is nice. My son finished school, so it's created more time to do a little more research versus taking him in, getting his breakfast ready, which I love because it's time with my son. Anyway, Target hit their earnings number, talked about future growth, and the street hated it and crushed the stock. Like, to me, this created an opportunity. I started a small position to get back into it. For those of you who've been keeping up, you know I owned it before. I sold it a couple of earnings ago when things seemed a little overly happy. It's fallen from mid 170s. Today, this morning, it was at $141 a share. I saw that as an opportunity to put about 20% of what I would want to put in and keep an eye on it from here. And I'm really hoping it gets down around $130 a share. I don't know if that's going to happen because if you paid attention to what they said, the report wasn't so bad. I mean, they actually hit their numbers, and I think their numbers look really good, and their growth targets look really good as well. Now, it comes out at a time that yesterday or the day before, they talked about having to lower prices on a bunch of items because the traffic flow has slowed. But that's okay. I mean, that's part of the ebbs and flows of what goes on with owning a big retail store like that, or multiple stores, not a store. You know, and keep in mind, it always goes along with what I keep talking about bad news with good companies. Now, I'm not going to put Target in the realm of, Amazon or Google or things like that. But Target is a very well run, great company, one of the better retail chains around. And despite Walmart taking off and doing so unbelievably well the past few months or year, or whatever it is, after they had bad news, if you remember, that's what drove the stock down, and now it seems to be going higher. I actually like the growth rate of what Target projects much more than what I look at Walmart, which seems to be trading better than what Target is. Now, stocks are very emotional, and that could continue that way. But at least for me, I would way rather be owning Target than the likes of Walmart. As always, keep in mind this is not financial advice. Please don't follow my suggestions. You guys need to do your own research. In fact, I would seek out the help of a financial advisor, somebody really good who knows your specific situation, what fits you, and helps you work a plan for what fits your portfolios. Following me or anybody on YouTube really is just a mistake. On top of the fact you really have to keep up, and they would have to do an unbelievable job of letting you know when they get out of things, when they change their mind on things. And even myself, like, I try to be good at that, but I don't update all the time. And sometimes I'll get out of something or change my mind, and I don't always post about it. So, how would you know exactly what to do outside of that initial conversation or comment about liking or disliking some stock? Um, Now, on that note, I've been also paying attention. Like, to me, Snowflake seems like it's actually bottomed out a little and looks attractive again. I don't know that I'd be delving into it too deeply. I just don't know a ton about the stock. But it's one of those, like, I remember Kramer talking about a while back, saying it's one of those companies you just have to own. Now, he was saying that when the stock was trading $400 or $500 a share. So it's only at $160 now. So if you had followed that advice, I don't know that it has worked out real well. But I'm guessing he really believed in the company and thinks they're in a great space. So I've kept an eye on it. Now, maybe you guys have noticed the same thing, but I've noticed a lot of the out of favor dividend stocks are beginning to creep higher. And actually, the dividend account that I have has been doing exceptionally well. And that's I'm assuming yours has as well. And what I think is really going on is, as we've seen the earnings of McDonald's and Starbucks and Target and all of the others that are showing that the economy is getting tough, it kind of confirms the slowdown that we're seeing. And if unemployment starts becoming an issue, I think the Fed's going to be pushed into a corner where they're going to end up cutting rates, whether the inflation has been put at bay or not. I'm not one of those that thinks they fudge the numbers. It is interesting that the unemployment data keeps getting updated after it comes out, which is kind of weird. But, it is what it is. And I think if the unemployment starts becoming something that they have concern of, it's going to cause them to cut rates quicker and sooner than what the markets are predicting. I think that what we're seeing with companies like Target and Starbucks and McDonald's showing that things are slowing, that kind of indicates that the Fed really might have to act sooner than later. And when they start cutting the rates, if that lowers interest rates and bonds, those companies will be able to borrow at lower interest rates, which impact their earnings significantly. That'll make a big difference for a lot of companies that borrow money. On the flip side, the big concern is, has the government and the US just spent too much money making foreign investors? And when I say foreign investors, I mean like the countries, China, Brazil, some Japan. Are they going to start getting uncomfortable continuing to buy US treasuries? And are they going to start getting uncomfortable keeping the US dollar as the world global, currency? If I'm China, just pretend for a minute, I really have some concerns after what we did with Russia. This is not a judgment on it. Well, it's a little bit of a judgment on it, but they're not our best friends all the time. If you're, Europe and all these other European countries, it probably doesn't bother you too much because we're usually pretty well aligned. But if you're a country like China and you've seen us get unhappy with behavior of Russia and then do sanctions, freeze up their money, pretty much call it useless on the global economy so that they can't interact with other countries, it's got to be pretty uncomfortable. Then, on top of it, we've talked about using some of the funds that we've seized to give it to Ukraine to allow them to help fight against Russia. Now, I don't care. It doesn't make any difference in my life. But again, if you're China or some of the other countries that aren't our best friends, you have to have concerns that if you do something that the US doesn't see as something that they're happy about, will we start doing things to you on the same scale? Much different than the tariffs that we've imposed and some of the economic trade stuff that we've been doing. If we really clamped down and decided that the yuan has no value and it can't be used to buy oil and things like that, and then they'll have to find solutions to circumvent. Well, they're working on a worldwide currency to try to get rid of the dollar, so to speak. I don't know that it'll happen, and I don't even have a real gloom and doom, and I don't think it should make any difference on how you invest or what you do with your funds. But if they're able to go that direction, you could see the dollar really get devalued on a big scale, and it could happen rather quickly. And when I say quickly, I don't mean it's going to happen anytime soon. It would be a slow progression, and then all of a sudden it would be a big change. The reality is, the best thing you can do is own assets, whether that's houses or stocks or gold and silver. And I'm not one of those, people that is a big believer in having a bunch of gold and silver stashed away somewhere. And in some ways, I think it's kind of silly because when you think it out to the extreme, like what are you going to do? Hop on a plane with a big bag full of gold and silver? Like, I just kind of find it, anyway, just my opinion. But I don't think it's a bad idea to be diversified into a whole bunch of things, and maybe that's part of the portfolio. If that ended up happening and the dollar really got devalued because it's no longer the global currency, you would see massive inflation, or at least a big one-time push of the dollar not having the same value because everybody around the globe wouldn't have to have some of it in their portfolio. The sad thing is, the things that we don't produce here in the States, like literally you'd see them go up significantly. And even things like houses that people are scratching their head not understanding or believing it'll keep going higher. If something like that did happen, the values of homes would likely go up as well. Not because the value of the home went up, because the buying power of your dollar actually went down. And it would become less difficult for, if you had Chinese yuan or another currency that then became stronger because of this, that would need less of them to buy your home, thus driving the values up, and so on and so forth. Now, that's why I said I'd let you in a little bit into my crazy brain thinking and how it gets out there a little bit. But just keep in mind that is not a big gloom and doom picture, and it really doesn't change anything in people's lives, but it would make sense as to why we've seen our dollar weaken and how it could continue even if things are okay in the economy. If you look around and go back to previous currencies that were the global currency, like, the British pound, London still exists and the UK is still around and their lives are fine. But, property in London is extremely expensive, and that's probably all part of it. And the reason this tends to happen is what makes it a global currency, and the reason people gravitate to something is usually because when other countries are in debt and don't have a lot of money, there is a country that comes along that's in a good financial position. So that's what happened around World War II, if my history is correct. Forgive me if I'm off. And the US kind of came in, we had gold, and we were in a good financial position, similar to what happened with Britain previously. And then they get in this position over the next 80 years where, since they were such good financial position, for some reason they then started to borrow. Now, in our case, it's generally because politicians want to get reelected, and it's not good politics to not spend money. When somebody comes to you and they want money to build new roads, to say, sorry, we need to be fiscally responsible, we're just not gonna spend the money, that probably hurts your votes in terms of getting into office. And unfortunately, they want to get reelected. That's their main driving force when you're in office, is your reelection. So we tend to spend too much money. We've borrowed a ton because of that. COVID put a huge ignition light to it, so we started spending a lot more, and now we've created an awful lot of debt. In fact, we've created so much debt that actually paying on that debt is becoming a big drawback or a big slowdown on our economy. And that creates concerns from the outside investors like China and the like as to how solvent we really are. If we're getting into more and more debt, how comfortable are they going to be to invest more in our treasuries? And then when they see us doing things using it as a weapon, which tends to be what happens from the countries that get in this position, they just get used to not having to follow the rules and kind of making the rules, that they get a little ahead of themselves. Now, maybe we figure a way to stay in that position, and maybe it doesn't happen. But I do see it as a legitimate issue that the other countries might start to have issue with how much debt we have, how we're spending, and how we're using our currency. And maybe they'll look to something else, whether it's using gold and silver, even oil, potentially Bitcoin. But to be fair, the problem with Bitcoin is, honestly, it's too small of a market. 1.6 trillion or 1.4 trillion is way too small if you're China or Russia or whatever country it is. It would have to be 100 times more expensive to be able to move the type of money that they move without making it have being way too volatile. It's a great idea because it's not regulated by anybody, but it would be really hard for it to be anything more than what it is currently unless it became much, much more expensive, where it really became a global currency. Now, it's possible, and that's a whole long bunch of stuff just on Bitcoin, not because I have an opinion that it's not a good investment. Like I said about the other stuff, I think being well diversified is a great idea. Again, not investment advice. You need to make your own decisions. But that's my whole wacky brain and when it gets out there in terms of thinking globally. In terms of our small world, I think it's a great idea to be invested in these dividend stocks because, at least for now, seems the other direction. Probably going to cut rates. You're going to see interest rates fall. And those dividends that you're getting now are really good returns. So you better lock them in. When I've talked about Pfizer, it was because it was getting a 6% return. By the time you're guaranteed, short term 2-year CDs that you're getting your 5% in, or your high yield savings account, adjust and match what the Fed's doing with their overnight lending if they start to cut rates. I'm thinking that the stocks that are paying 5 or 6% yield, or even something like Altria that was paying almost 10% in yield, odds are the stock prices will be higher by the time the Fed's cutting rates and you see those guaranteed money yields start to drop. Be a tough time to then transition because those stocks aren't going to be paying the same yields and the prices are going to be higher, which is why I think you'll see all that money from the sidelines start coming out at the wrong time because they're going to feel like they're missing out. And that's when they're going to get FOMO that could cause the spike up in the markets that nobody sees coming because everybody is so gloom and doom right now. Boy, that was a whole lot of information that was a little bit crazy. Anyway, I hope you liked the content today. Target looks super attractive. I was really glad to see the earnings come out just fine, but the stock dropped $14 or $15. I'll have to see where it is now. I'm kind of curious how it's been doing throughout the day. Yesterday or the day before when I talked about Nike and Palo Alto networks, I had at least one person make the same type of comment of how they don't like it. And I will tell you that the more people who don't like the things that I'm investing in, the more comfortable it makes me with those investments. Understand the reason I buy things when the news is bad is because the news is already out, right? I mean, does that make sense? But what ends up happening is when somebody on TV, like Kramer, was really talking down on Target today. I think what happens is people see that. They see him talking bad and they see that the stock is down 14 or $15 and they think, oh, he's right. Well, meanwhile, it's already down. The news is already out. So if you wait and you miss the opportunity in a year, that news will be done and it'll be old news. That's why I like Boeing so much. The news was so terrible. The planes were crashing. They were using the planes for personal use. The people who were, the whistleblowers, not like there was so much going on and on and on. It's hard to get much worse than that. Same with Archer Daniels Midland. So what I try to look for is when the news is really, really bad and the stock doesn't seem to be going lower. Like it keeps pushing down and pushing down. And trust me, one like Starbucks, oh my God, it turned my stomach to buy it, but it fits that category. It was really bad earnings. And the CEO in my mind, oh, he did such an awful job. Well, it was very hard for me to suck it up, accept that that fits that category, and buy a few more shares because that was pretty bad news. In a year, I'm guessing nobody's remembering it. Nobody has any idea what the CEO said when they had a bad quarter in 2024 and whatever they talked about. And if I really guess, by then, sales have normalized. If anything, they're slowly ticking up and getting back to what economies normally do. It's just kind of the way things go in the cycle of what happens. In fact, one of the other ones, and it's finally working out because it took a while, I talked about me shorting Chipotle, and I never talk about things that I short because I never do it. But it just seems a little overhyped. And look, I love their food. I think they have a great restaurant. It's very hard for me to take the opposite position. And odds are I'll mess up the trade because I like their company and it'll be very hard for me to stay short. But if I were long the stock, I would definitely be lighting up. My opinion, you need to do your own research. Anyway, time for me to go before I just rattle on and on. Before I forget, before I really hit the end button, don't forget, if you haven't already, hit that subscribe button, smash the like button, make some comments. Tell me the stocks you guys love. Tell me what you hate. Tell me the reasons you love them and you hate them. And hopefully, I'll talk to you tomorrow. Have a good day. Bye bye. Look, what are you still doing here? The movie's done. It's over. Sorry, Ferris Bueller reference. Anyway. Yeah. One thing I forgot. I'm really excited to see what happens today with Nvidia's earnings. Um, Obviously, I'll talk about it either later or tomorrow. Um, I guess we'll see what the stock does. I'm hoping that they crush it on earnings and the stock just keeps going and it shows that there's still things out there that are doing really well. AI is seems to be doing well, and they cover all of it because all of, whether it's Amazon, Google, Meta, Tesla, they all buy those chips. So if they're doing well and they're continuing to buy those chips, Nvidia should be as well. That is not my prediction. I don't know. It's just what I'm hoping to see. Um, so we'll talk about it tomorrow. Have a great day. Bye bye.